how to identify liquidity. That is the question I'm getting asked time and time again. So I'm going to briefly go through right now the best way for you to identify liquidity and how to look for those areas when you are trading for potential targets or when you're looking for potential entries. Let's go closer into this daily chart. Where do we see potential areas, of liquidity? Now, the liquidity is going to be always above swing highs and below swing lows. So if we're looking at this current chart here, we would have liquidity sitting above this swing high. We would have liquidity sitting above this swing high, above this swing high. Okay, we would have it above this swing high. This is where the current liquidity would be left. Okay, so where we'd see it now sitting. Where was potential liquidity before and where did we see it run? We had some at this high. We got run through this candle. We had some at this high, which got run on this candle. So when we see a push through these liquidity swing highs and rejection candles, or even those engulfing candles, they are very, very good insights of a good potential entry. But let's say you are selling from up here. Where would you be looking to target? Well, you'd be having a potential target here and another one at this low. And if we look to the left, another one this low. They would be the areas where you'd have potential stops and orders in the market. And that's all liquidity really is. We're looking to run the liquidity, for your profit targets and to sweep those areas for your entries. If you can remember and take away this one simple method of understanding liquidity in the market, that is all you need to understand. Liquidity will always be at the swing highs and swing lows in the market. Now, we're not always going to see the liquidity run straight away. We're going to have a build up of liquidity as well, where we see equal highs and lows. Now, potentially you've been taught double highs, double bottoms are great areas to look for a trade, but what they're actually creating is more liquidity. Equal highs and lows are just creating more liquidity to be run. Let's look at this area right here. Does that create a sweep? That is potentially an area of liquidity. So roughly equal highs. That means at some point these highs will want to be run to take up that liquidity. So just have to bear this in mind. It's not always going to happen straight away. Look, if we look at this market to the downside, when we see a reversal, there's liquidity which got run. We closed through this level. That means that liquidity has now been taken. We have a pullback, into an area here of demand. Now we had an area of liquidity below this low, didn't get run. But look what did happen on the way up. We got this low run and this low here was run. Those two areas were taken for an entry. Liquidity was run to take any stops. The stops were taken to push the market higher. Where did it then go for? It went to run the liquidity at the swing highs. So that's where the market's going for. It's where profit targets are going to be sitting. That's where breakout traders are going to have that order sitting. So we have stop losses. We have orders, take profit levels. That is what's the makeup and the build up, of understanding liquidity. So again, when the market comes back, where are we going to run? We're going to run this high. There we have a run of that high. Next, we're going to have a run of this high. We close through. Then we have this high. Look, we sweep that high only. So the market very often will sweep a high, pull back, then fill the market to run higher. Then we've got this high. This time we had to run through that high. And I don't think we actually made it to this high. We're just below that high. So we didn't quite run to that swing high. But we can see on the way down that the market actually swept this high to get the orders to push the market lower. Hey traders, we'll get back to the video in just a moment. But I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. Why? So the market can run this low, which we pushed through. And if you look at this, what happened before that? We had to sweep this low to get the orders to push higher. Okay, we even swept here as well. And then the market could then push for these highs. We had a smaller high here as well, another high. Then we had these highs here to the left that got run. So if you just start mapping out your charts, looking at those levels in the market, where liquidity is going to sit, it's going to give you a much better idea, location of where entries can come from and where those profit targets can be. So let's just take everything off this chart. Let's just look now at this current area of price. If we're trading this, now you need a good understanding, of course, of the market structure. Now, if you're not sure on market structure, there's a full playlist in this channel. Go through each video, it will teach you how to apply market structure. But if we're looking at market structure here, let's say we had a break here to the upside. We then had a break to the downside. Okay, we have a pullback. Where's the market going to run? It's going to run this to break structure to the downside. Now we're looking at another pullback. Where's it going to run eventually? It's going to run this low. Okay, so the market pulls back into areas of supply and demand. Again, there's a full playlist within this channel, how to understand, draw, and use supply and demand in your trading. There is also another playlist that goes through the use of imbalances. Well, I'm now going to talk about imbalances. Within this area here, we have an area of imbalance. We also have right here another area of imbalance. So we've just closed through that imbalance, which suggests that the market needs to push higher for more orders. Now there's orders left over in these imbalances. Now this is not the same as liquidity. If we used to see the market pushing up now to this area, where we're going to push to, we're going to push for these lows. Okay, so understanding this is where we can start to look for your profit targets. Now, if we were to drop down a time frame here on a 4 hour, you'll see how we can use liquidity for our areas to take a trade. If we're to look for a buy from here, where's a great location? Well, we have an area of imbalance that can push the market higher, but we can also see we have a swing low here. So that tells me that if the market can push down here, we can sweep this low. Very often we'll see another sweep and then a continuation to run this high, which will then become a new area of liquidity. That's what we class as a weak swing high, because at the moment we are bullish on this 4 hour time frame. So a sweep of this low could see a continuation to run this high, okay, of liquidity. So that's how we look at liquidity. Now, if you want to learn more on the use of supply and demand, I do suggest checking out the Profit Per Trade workshop. It's going to go through exactly how you can apply and master supply and demand. Go and check it out. There's a link below in the description of this video, and there'll be one popping up right now. Understanding liquidity, you can apply it with the use of your entries. Now, there are ways we can look at using this on a lower time frame. If we see the sweep on a higher time frame, that all comes into understanding confirmation of those areas. And again, you can learn that inside the Profit Per Trade workshop. Now, once we can start applying where we can look for our entries, you know where your target's going to be. You can look for the swing points. That's all you have to do. If we was to drop down to a 15-minute time frame, let's look at a 15-minute from here. What do we see? Right, okay, so where did the market here pushed up? We broke this structure high, let's say. Then we've pulled back. We've created these areas here on the way up. We've dropped down, lower high, lower high. You see we continue to push higher, and then we've pushed through. The market creates a sweep here. Okay, we've pulled back to do what? Well, we create kind of a sweep here off the low of this previous candle. It's not an actual sweep, but it's a sweep of that candle. We've then pushed higher okay, to push through this swing high, which we failed to do. We swept through it. That's indication of a reversal in the market. Remember, when we say a sweep, we're not going to close through. It's not a break of structure. It's a sweep. So then that is a sweep of liquidity for potential reversal. Where does that tell me the market was going to go from here? It was going to go for this level. That is the nearest area of liquidity it needs to run. Okay, all these lows made in between, they're nothing. Okay, forget about them. We're interested in the previous low needs to be swept. Okay, there may have been one just there as well. I'm not quite close enough to see. There may have been one just there as well. So it may want to run this low first. Okay, so after this sweep, we went down, we closed through that low. We had imbalance to go through as well, and then we run through this low. Now, after that low is taken, we then have a swing low here. At the same time, that was pushed through. Then you have a swing low here. We push through that low. And again, we have a swing low here. Now, after that low has been taken, we then have the next one is lower down here. So we have quite a bit of space for the market to run to. And we can also indicate as the market breaks structure, we pull back, we'd expect it to run this low now, because that's our weak, okay, 15-minute weak low. But it's also where we can see potential stops and orders being placed. And it could even be targets as well, take profit levels. So just start to map out those charts. Forget everything else and just start using your levels. Read the markets, understand what is happening. A close through level is a break of structure, indication of a continuation. A closed through, okay, indication of a continuation. So if we was to close through this level now and we don't wick through and just a sweep, it's an indication of a continuation of the move. And that's all the trends are in the market. Okay, we're looking for liquidity to be run or liquidity to be swept. And the next video coming up, we'll go through more on how that actually works, understanding those liquidity sweeps and liquidity runs in the market. And there'll be a link popping up for you to go through and check out that profitable trade workshop.